Okay, we're going to change the subject. We're already getting questions for Bob Chapman today. I guess they must think something's going on in the financial sector. Bob Chapman is our guest every other Monday. He comes to let us know the news, not necessarily good news either, but he helps us understand what's happening, and I'll tell you, he is right on target just about every time. Bob Chapman is the editor of the International Forecaster newsletter. He was on Wall Street for about 35 years, and now he comes to us with his information and his guidance for us. Thank you very much, Bob Chapman, for joining us in the Power Hour today.
It's a joy to be here again.
Well, thank you. We appreciate your joining us today. Looks as though gold is starting to go up. The commodities are looking good. But it seems to me something's going on in the commodities market a little bit underneath the surface. What's your take on it?
Well, I think it's a flight to quality and an effort for those who are in dollars to protect themselves, and there are those who believe that being in commodities is better than being in dollars and other currencies as well. And so there has been a great deal of buying. We've seen copper go up tremendously. It went from approximately $1.50 back up to $2.50. And it's now resettling back around $2 and trying to find a bottom for itself. To use copper as an example, not $2, $3, trading around $2.80 right now. And that's quite a rally. And so I predicted that at the end of September, the end of August, beginning of September, that we would have a slight sell-off in commodities, and that's because all markets like to digest gains or losses, and so they have a period where in the long side of the market they will come back. The Chinese, of course, have been big buyers because they injected $1.8 trillion into their economy since February, and so there's been a big demand for commodities because of infrastructure building. And so I think that's going to kind of run out here probably early next year, maybe before the year is out. And then I think commodities will settle in at a certain level. And then when inflation shows its head again, they'll move up again. And, of course, this is all translated into higher prices for things, and that includes oil as well. Oil has been trading pretty steadily here in the area of $68 to $73 a barrel, and it'll probably stay there for a while. As far as gold is concerned, we had a breakout. We had a close, I think it was 106.50, $1,006.50, I should say. And that was a clean breakout over 1,000. One of the more significant things that I've noticed, having been doing this for 50 years, is that there is very little physical selling in the London market. Like this morning, the London market got down about $10.10 an ounce on gold, and then it started to come back to about a -8, and then New York opened, which is COMEX, and that's the futures trading contracts. And they try to drive it down lower, and unsuccessful. Gold right now is down $5.80. And that's the work of the United States government.
You know, we had one question. Sorry for interrupting you.
Sure.
What is the COMEX? Could you explain the COMEX?
Well, the COMEX is an exchange where commodities are traded, usually on margin. And a great deal of the trading on COMEX, I have to guess that 80-85% is done by professionals, banks, brokerage houses, people like that. And it's one of the largest of its kind in the world. I think COMEX is soon going to run into some very serious problems with gold and silver because they make deliveries of gold and silver for those who buy contracts, and yet their figures for inventory don't change. And that tells me that they don't have the gold and silver that they say they have, and we know that they were lent gold by the European Central Bank, and they were also lent gold by the Canadian government, both surreptitiously and secretly. But my sources tell me that they were lent gold so they'd be able to make the delivery. And what they're doing now is saying to gold delivery recipients that we will give you shares in the ETF, the Exchange Traded Fund, GLD or SLD. GLD is for gold and SLD is for silver, and they both trade in the New York Stock Exchange. And the problem with that is that, first of all, they're supposed to have the gold for delivery, which they don't, which means they're faking it. And second of all, I have great reservations about the ability of delivery from both GLD and SLD, because I don't believe they say what I don't believe what they say they have in inventory in gold and silver. I think they're lying. And I think they're using futures and forward and derivative contracts to cover their position as money comes in to purchase gold and silver in both funds.
Well, what about the story that gold investors are warned to liquidate? London's, according to Ambrose Evans Pritchard in Telegraph, he's saying that London's leading gold forecaster has advised clients to liquidate holdings of gold and silver until the latest speculative fever abates, warning that futures contracts on New York's COMEX exchange are flashing warning signals. That's what you're talking about here?
No, that's about government propaganda. That's about as true as having a dog with 8 tails.
Really? So Ambrose Evans Pritchard.
He's a spokesman for the British royal family, which is the head of the black nobility. You can't believe a thing he says. And he gets all kinds of press coverage because he's in that position. He's an instrument of them, just like Barrick Gold since 1987 has been actually an appendage of the United States government trying to drive the gold price down. And significantly, Barrick last week very quickly came out and said, we're going to cover our hedges. Hedges are when you sell gold forward, and you're essentially shorting gold by doing that. Shorting means you're betting it's going to go down, and you're trying to suppress the price by selling gold that hasn't been mined yet.
Well,
so they did that for years.
Yeah, and that's what they're doing is trying to say that it's going to go down to $950. They say that the buying frenzy last week, now this is the propaganda again, listeners. The buying frenzy last week followed Chinese comments on the need for reserve diversification from dollars into euros, yen, and gold. Now, I think this is really dangerous here, the very fact they're putting this out for public consumption. And they say, as well as the proposal by the United Nations for a world currency, the dollar fell sharply, propelling gold to $10.11 an ounce, tantalizing close to its all-time high of $10.30 or $1,030. So now they're trying to tell everybody, back off of gold. It's going to go down to $950. So just wait a little bit later on and then get gold. Why would they do that?
Exactly. That's exactly what they're trying to do. They're trying to gain time again. Now, what people have to look at, and that's why we publish the International Forecaster, and in the next issue you'll see last week's figures and the figures of the gold report from COMEX. And what's of particular interest really is only the commercials. The commercials are brokerage houses, but mostly banks, all of whom are acting for the United States government. Now, the short position bets that gold or silver are going down in this case. And we're looking at a short position in gold of 270,800 contracts in round numbers. And that is within 5,000 contracts of its former high. Now, if you put the gold futures net short position together with the option open interest, you don't get 270, you get 290. And so there's going to be a battle going on during option exploration, which will be next week. So I think the market will rally from here. I don't think what's going on today is going to have any significance. I think the market in gold and silver are going to move higher here. And then next week, the government will try to drive the price down because they have written the contracts through the banks that people have purchased, and they don't want them to exercise the option and take delivery.
When we come back from this, okay, we got a 4-minute break. When we come back, I want to also continue that, but also, what about this coincidence of 9/11/01 and 9/11/09, the stock exchange, the Dow closing at the very same thing? Back in 4 minutes.